welcome back to my YouTube channel at illumination.org.ng. Kindly subscribe to the YouTube channel, and as we've been saying, don't forget to click on the notification bell so that you can be notified whenever I drop a new video. So welcome back to class. Okay, so today we are going to look at IAS 16, that is International Accounting Standard 16, which talks about property, plant and equipment. Okay, so these three items are ingrained in one, that is the IAS 16. The International Accounting Standard 16, emphasizes on the recognition of an item as property, plant, and equipment. Now, in this section, we're going to be looking at the rules of accounting for property, for plant, as well as equipment, as can be found in IAS 16. So, what is property, plant, and equipment? Now, according to IAS 16, it is regarded to as assets that are held for use in the production or supply, as well as supply of goods, as well as services, for rental to others, or for administrative purposes. Okay, now these are also regarded to as assets that are expected to be used for more than a period. That is, it is expected to be used for more than 1 year. Okay? Now we talk about an asset that is being used for production. It means the asset was not acquired for immediate use. Okay, it is used for what it can produce. That is, since we are expecting economic benefit to flow into the business by acquiring or procuring such an asset. And also, it is also regarded to as an item that is used for supply of goods or services. Now, what we are saying is also that there are some assets that we need them in the organization to serve as a support system, okay, for the main asset that we are using for production. For example, we can have motor van, okay. The goods that are being produced in the plant, okay, can be transported, okay, moved from one location to another through the use of motor van. So what motor van in this case does is that it doesn't produce any goods to us. What it does is to support the production process, okay, by helping us to move the goods to our customers or to the warehouse, and which we indirectly will derive economic benefit from, because we've made the logistics transportation easy for the customer, okay, and this will also aid us in being able to meet the demands of the customer, and in return we get whatever economic benefit from this, okay. And also there are some items, okay, that we buy them. When we buy them, we rent them out, we use them as a form of a cashback process, whereby we rent them out to individuals and we get paid, okay. We derive economic benefit from them, okay. And also there are some that are being used for administrative purposes, okay, like buildings, okay. If we have a place where we create service, okay, for example, we may have an office, we may have office building, okay, where the building serves as an asset for the organization in rendering services. In this case, we are not producing, okay, we only rendering services. At the end of the day, we also expect economic benefits to be derived from this whenever we get the fee, whatever services we have rendered, and this building will serve as an asset to us, okay. Now, we also say that items such as spare parts and as well as standby equipment are also regarded to as well property, plant, and equipment whenever they meet this definition that we've given already. How do we recognize PPE, property, plant, and equipment? So don't forget that in this video, when we discuss the definition, we talk about the standard, okay, and we're also going to be doing some calculation. And one thing that you have to know is that as a student, as a professional accountant, maybe as a beginner, okay, you can't run away from calculations, okay. You can't run from mathematics, okay. You'll be doing what we call present value, computation, when you are discounting, okay, the asset. And also you need to be able to familiarize yourself with all these formulas, okay. This we can now call them accounting formulas. So How do we recognize PPE? Now, the initial recognition, okay, of a PPE is the cost incurred on that property and equipment, which must be recognized as an asset to the organization. If we believe that we are going to derive future economic benefits from that asset, then we can call it what? A PPE. Okay? If and what? If and only if we believe that this item, we're going to what? Derive economic benefits from it whenever we acquire it or we construct it, okay? Because there's some assets that we have to, there are some assets that we have to just first construct them, okay, before we can put them into use, okay? So for as long as we're going to receive some things in return in the future from the usage, then it becomes a PPE. And also, whenever we can measure the cost of the items reasonably, okay, and reliably. So these assets are going to be recognized, okay, as PPE. Now, there are times where we may also acquire items of PPE as for safety, for environmental reasons, okay. And if you look at this, we've said that PPE are items that we acquire to aid us in production of goods and services, okay, from which we hope to derive economic benefit. But there are some items that we serve as as items that will help in safety purpose, okay, as well as protection of the environment. Now, these assets, okay, they are not really directly involved, okay, in the business. They are more of like an auxiliary asset, okay, that are aiding the production process. For example, we may have some buildings, okay, for example, for like a sick bay, okay, we may have an hospital, okay, being erected in the company, okay, which serves the purpose of providing the service of health services to the workers, okay. If there's any injury during production, the workers are going to be brought down to the hospital building for further treatment, okay. Now, these assets are they may look as if they look like assets that are not being used for production process, okay. But at the end of the day, they are indirectly helping us to achieve or acquire economic benefits in the future, okay. And this is also this kind of assets that serve as safety purposes, and also help us to protect the environment, okay, from any form of harm. For as long as they are directly involved in the business, okay, they are also regarded to as property, plant, and equipment. Okay, so we're going to also look at when we talk about PPE as an asset, we know that we have to also consider some situations or circumstances, such as when we have impairment, okay, impairment of the asset, that is when the assets are no longer serving the purpose for which it was acquired for. And also when we have depreciation, okay, we also have depreciation, okay, that is when we have the wear and tear of an asset for reasons, okay, so many reasons, such as obsoleteness, technological changes, okay, when the asset is no longer of the required use. So these assets, we're going to be recognizing all these factors in an asset, okay. And also we're going to be talking about the various method of valuation, such as the cost method, as well as the revaluation method, okay. So we're going to talk about them in the next video, okay, where we're going to be doing some calculations and also exposing some other things to you for you to be able to benefit from. So don't forget that when we talk about depreciation, we're talking about the reduction in the value of an asset, okay, over its useful life, okay. And we know that the formula for calculation of depreciation is the cost of depreciation the depreciation value is cost minus either what we call the scrap value or the residual value divided by the lifespan of that asset, okay. Now, when we talk about the scrap value of an asset or the residual value, this is the value by which an organization feels that whenever it is going to dispose of the asset, it can still get some funds or some returns back from that asset after its useful life, okay. That is the amount that the asset will command after being used during its lifespan, okay. At the end of its lifespan, then when it's being sold, okay, the money or the funds that come in through the sales of that asset or disposal of that asset is what we call the residual value or the scrap value. Okay, now let me just give you an example. For example, assuming that we have a computer, just like the just assume we have an HP computer running on Windows SP. You remember the Windows SP of those days? We now feel that this asset can no longer serve the purpose for which it was acquired. Okay, we may decide to what, if the asset has used, maybe the asset has used 5 years. We bought the asset, maybe we bought the laptop for 200,000 naira back then. At the end of the day, the current value or the fair value or market value of that asset now is now 10,000 naira. Okay, after the useful life of that asset, then the money that we're going to sell the asset in the market is what we call the residual value. Okay, so all these we're going to recognize them whenever we are going to talk about IAS 16 on PPE. Also, don't forget that there are times whereby we may borrow funds, okay, from the various financial institutions, okay, to finance a project or to finance the acquisition of property, plant, and equipment. Okay, in this case, we have to refer back to what we call IAS 23, which is on borrowing costs. Okay, because this gives us the ability to be able to recognize some expenses that are incurred on the asset being constructed or being acquired, and capitalizing them. Okay, we're going to capitalize such assets whenever we think that the asset is the loan or the interest on the loan. Okay, the interest on the loan is a part, okay, of the initial cost of that asset. So what we're saying is that, when we have interest on loan, there is a part of the interest that we are meant to capitalize based on the provision of IAS 23. We have to also put this into recognition, and the part of the interest that we're going to expense, which is a part of the borrowing cost, we also have to set that aside as an expense, okay, in the income statement, while we capitalize the remaining one based on the qualifying asset, okay, as a part of the assets in the statement of the financial position. So we should not forget about this. And also, there are times where we can recognize the asset as inventory. That is, those assets that were just acquired. They are only acquired or held for sale. The reason for acquiring them is not for us to be able to use them after 1 or 2 years, okay, but it's for us to be able to sell these assets immediately when they are being put to their normal form, where we're going to dispose them of, and this time they serve as inventory. And then in this case, we're going to be considering IAS 2 on cost of inventory, okay, whereby we're going to be evaluating the inventory, okay, based on the provision of IAS 2 on inventory. So thank you very much, and I'll see you in the next video, where we're going to be talking about the provisions of IAS 16 on property, plant, and equipment, and also we're going to look at some calculations, okay, to aid us so that we can understand what we are really talking about. Thank you very much. Please don't forget to subscribe to the video, and also click on the notification bell and click on the like button, and help us to share this video to your friends, your colleagues, your classmates, your loved ones. Help us to share this video. Thank you very much, and see you in the next video. Bye bye.